let's get going. Who've we got? Rahul, you good? Can you hear me, Rahul? Here he is. Okay, cool. Right, I think we're just going to crack on. So, today we are going to be talking about some Advanced Liquidity Concepts. Robbie! Just in time. Just about to start without you. You good? Can't hear you, mate. You're on mute.
Robbie, okay.
He's still on mute.
There we go.
There we go. How you doing, Rob? You good? Nice to see your
good,
face.
mate. Just thought I'd join.
Oh, I love that. I love that. This is the great thing with these webinars. I'm trying to give out free sauce, and only 3 of us have arrived. But hey, look, you're gonna get it. You're all gonna get it. Intensive one-on-one coaching. All right. So, right, let me just share my screen, and then we can cracking on. I'm not going to do a cheesy YouTube intro, but if I were to do a cheesy intro, welcome to the webinar, everybody. Right, so this is the order of play today. So
Jack, are you gonna just stop you there? Are you gonna record it for the people?
Record it? What do you reckon?
No?
What do you reckon? Am I going to record it? Of course I fucking am, mate. It's already recording. You're famous now. You're famous. Okay, so I want to talk through some basic concepts first. So high probability trading, which is, you know, it seems pretty basic from the outset, but high probability trading is all about making sure that we're taking trades at the right times. The very simple way to explain that is we're making sure that we're taking sells from high prices and buys from low prices. Really basic stuff. Sell high, buy low, okay? But I want to talk you through, you know, I think it's a basic thing that I struggled with for a little while. You know, you'd be looking at a sell, and then the sell wouldn't go your way, so you then start buying, and that ultimately becomes a low probability trade. So we're going to talk about some high probability trading, and just some good kind of filters to make sure we keep away from those ideally. We're going to be talking about, keep away from the low probability trading, of course. We're going to talk about some high potential trades, which is making sure that when we are taking trades, we're not, you know, there are high probability trades that have low potential, which means it might have a really good chance of working out. And these are, you can kind of interlink these two things. Might have a really good chance of this trade working out. However, what is the potential of the trade? How far can it actually move before it's likely to start reversing on you? So we'll talk through that, because there are 2 factors that I kind of include in all of my trading there. I think they're really, really important as well. We're then going to talk through some advanced liquidity concepts, a couple of things that I've been learning lately that have really made a massive, massive difference to my trading. You know, I've been funded now for quite a while, and I've been making some good profits, but I would say that I've doubled some of my results have been about triple what I've been doing recently. I'm able to get into much tighter trades. I'm back trading the 1 minute time frames, which for those of you, a man who've known me for a little while, I always advise people away from the 5 minute time frame. That's because I didn't fully understand it. If I hold my hands up and just admit that, I didn't fully understand how to get into these 1 minute time frames. Now I've got it pretty nailed. And I'm going to show you how I do that now, and where to pick the best zones from. And then we will have some time at the end where we can go through some questions and queries. Okay, so let's talk about some high probability trading. So it's pretty simple. Okay, if we have a market that is moving like this, okay, and we have a market that's moving like that, okay, where should we be selling from? Can you guys draw on my screen? Do you have that ability? That's something that you guys are able to do. Anyone there? Hello?
Yeah, maybe no, because the drawing feature only available in Zoom, I think.
Is it not available? Okay, I'll note that for next time. Okay, so tell me then, Aman, where would we be ideally looking for sells from? And why?
From the premium area?
Yeah, the premium area. So we would, you know, we would typically draw on our rangefinder like that, or we just kind of eye it up, don't we? Okay, and then where within that would we be looking from sells from? I know this is basic stuff, but you'll see what my thought process is.
Yeah, we can do from 20 0 to 0.25
Yeah,
for a
0.25. So there, that high. Yeah, that's a
yeah
good
for a
area for
more
sales, right? Yeah, everyone
for a
agreed.
more
Good
yeah.
area for sales. Yeah. Okay, cool.
Mm.
That is because that's a
So we
value
can
area.
so we
Okay,
can look
that is an
fair
area
value
that.
gap or imbalance.
Oh, guys, can we mute the microphones? Is that okay? So that is an area where it's more likely that we're going to get a sell opportunity from. Okay, that becomes high probability. Okay, that's a high probability trade. Okay, in a bullish market, okay, we are looking for basically the same. Okay, we draw on a rangefinder. Okay, we're waiting for price to pass the equilibrium area and, you know, ideally reach down into our discount zone. But, you know, we can still take buys from there. Yes, buys between the 0.25 and the 0.5 are lower probability, but there's still higher probability than up here. Okay, so ultimately in a bullish market, we are going to be looking at, if I find my circle again, why does it keep disappearing? Okay, we're going to be looking at buys from here. Okay, everyone agreed to that. It's really, really basic stuff, yeah? Okay. Now, the problem with this a lot of the time is that the market doesn't always move in this beautifully kind of trending fashion, okay? Now, I used to fall really foul to these kind of things. For example, okay, here's a really good example here, okay? We've got price moving up, moving down, okay? We've got clearly bearish price action here, okay? What's happened here is we've had... Guys, can we mute the microphones? Is that okay? Yeah, let me see if I can do it. Perfect, okay? So, where are you guys? Perfect, thank you guys, appreciate that. Okay, so we are ultimately looking for sells from these areas. Now, we don't always get them, okay? And what often happens is we get a buy move, okay, that pushes us out of our standard, you know, really nice trending marketplace. And what often happens is we have these push-ups, okay? We have now a bullish potential change of structure. We've got to pull down and we've got to push up, okay? Now, if we're looking at bearish market structure, okay, whilst this little trade here has worked out, these are the sort of trades that if you want to be consistently profitable, you want to be staying away from, okay? Because how many times have you been caught on the wrong side of the marketplace, okay? You take your trade and where's that gone, okay? You take your trade, okay? You see, I used to do this all the time, okay? We're looking for sells, okay? We've got this liquidity high here, which is the Asian high of the range, okay? We're looking for sells somewhere along here. We don't quite get the sell set up. Price pushes up, and then you end up then taking a buy, okay? Because you think, well, we've broken bullish, so we're going to be a breakout trader for today. And I'm going to hold it all the way up to here. And ultimately, what is more likely to happen in those situations, because we are overall bearish, what is all that price has done is it's taken out liquidity here. It's then tagged into this supply area, okay? Tagged into that supply area there, and ultimately reversed. So it's really, really important to make sure that your trades are always high probability, okay? Because all we've been able to do here is, let's say you were even playing it on, you know, on the safer side, and you were thinking, do you know what? I'm going to get into this trade. I'm going to take it with this rejection. I'm going to put a tight stop on it, and I'm going to hold it to 50% of this zone. You've only got out of that, what, 1.6, okay? It's not the best of trading, and that's because that's a low probability trade, because we are buying in a bearish market. That all makes sense to everyone, yeah? Everyone with me on that?
Yeah, it makes sense.
Yeah, makes sense? Okay, cool. So we want to be making sure that we are staying on the right side of the bias, okay? Now, trending markets, okay, especially when it's something like this, the hour kind of trending marketplace, okay? What we want to be doing is, there's nothing wrong with placing a buy, okay, in a bearish trending market. But it has to be in an area where a buy is higher probability. Now, if we draw on our rangefinder, let's use this entire range here, because this has been broken ultimately, so that we're using our entire range here, okay? A buy is much more likely from the lower 25% of the zone, okay? ultimately, if we are looking to buy this marketplace, we want something like a manipulation off this zone. We want a reversal in this area. And this is where we're most likely to get into more profitable buy trades, okay? You could have bought here, and in this instance, you would have actually made some money. But if you see that most of these situations where price breaks out, like this one's a good example here. So we've got some bearish trending. We break out above those highs, okay? Break out above those highs. If you were able to get into a position, let's have a look and see what we would have got, okay? If you were able to get into a position there after the breakout, okay, you very quickly, as you can see, is there a setup there? Kind of maybe a setup there. But where are you taking your stop? Is your stop above that high? Maybe. So your profit above that high? So maybe it's a 1R trade. So this is where we lead on to high potential trades as well, okay? We want there to be high probability. And we know that because of liquidity, and we're going to come on to that point, because of liquidity, okay, we've got this liquidity here, the likelihood of a buy working out when it's extended like this, okay, if we use this as kind of our range, the likelihood of a buy working out when we're in premium is so low it becomes low probability, okay? It also has low potential. And what I mean by potential is it's potential to move in our favor, okay? You know from using the range of a marketplace, okay, that liquidity is sat above these areas. So this is where if liquidity is swept, price is likely to reverse from. So it's really, really important to understand the differences between high probability and low probability, okay? And again, it sounds really basic, it sounds really simple, but so many of this get this wrong. It's that FOMO, that fear of missing out. We think, right, our sells haven't worked out, so we're going to get into buys. And actually the patience to wait for price to come into a premium area, or maybe to wait for another sell setup in this instance, is really, really important. So that's something that I want you guys to all work on, okay? We want to make sure that the trade is high probability first and foremost, okay? Which means selling from premium areas, okay? And buying from discount areas. Again, it's really basic stuff, but it's good to reiterate. Now, if you want to understand whether your trade is the right one to take, the second question I want you guys to start asking yourself is this trade, or does this trade, sorry, have a high potential? And what I mean by that is a high potential of moving, a good distance in our favor, okay? So let's say you got the perfect setup, okay, here, and you managed to catch this little, divot here, for example, okay? You've then got to ask yourself, I've caught this trade perfectly. Am I happy? Am I happy taking the trade to my next liquidity point, okay? Are we all agreed that, we should be targeting liquidity points for our profits? Everyone on the basic understanding of that, yeah? Liquidity will, be the focus of where we're going to take profits, because that's where we're likely to see reversals. Everyone cool with that concept, yeah?
Yeah.
Yeah, okay. So, in this instance, let's say we got the perfect entry, okay? Firstly, is your stop safe? Anybody? Is the stop safe there?
No,
No.
of course not.
Why not?
It's a low time frame, and also we have imbalance left.
Yeah, that's it. Exactly right. So we've got an imbalance left below there. Okay, so firstly, okay, we're starting to build factors into why this trade might be low probability, yeah? Okay, we're buying in premium of a range, okay? We don't have a safe stop. There's nothing protecting the stop. And if we get a really good entry, yeah, do you know what? We might get 4R out of it. But what's the risk here, man? What might happen? Or what probably would happen? Rob, can you hear me? Rob, what about yourself? What's likely
I
to happen in
think
this
your
instance?
video is now lagging too much.
Oh, can you not hear me very well? Yeah, hello?
What's going on?
Can everyone hear me?
I see you hanging.
Can you hear me now?
Yeah, yeah.
Yeah, you can hear me now.
but
Okay.
We
Okay,
can
cool.
hear now.
Yeah,
Yes.
okay. And is the you can see my mouse moving around? Is that okay? Yeah.
Yes.
Yeah, okay, cool. So, just
Yes.
coming back to the question, okay, what is likely to happen in this instance, okay? We haven't got to say stop, okay? We're buying into premium. What is likely to happen? Anyone? So, in
the
case...
price can easily fill the imbalance
Yeah,
below here.
that's it.
And
Easy fill the
yeah,
imbalance, okay? We've got more reasons for this market to go to the sell side now, okay, than we have for the market to go to the buy side, okay? Which makes this a low probability trade, and B, it makes it a low potential trade, okay? Now, most of us wouldn't get a tight entry like that. Most of us are catching something like that. So you might get 1.5, 2R out of the trade, but that's not the sort of trading that we want to do. We want, if the price has a low probability and a low potential, okay, we haven't got these confluences stacked in our favors. So what we ultimately need to do is we need to wait till it turns the other way around. So don't just ask yourself if your trades are high probability. Start asking yourself if your trades are have a high potential as well, okay? Now, what we could have very easily done in this instance, okay, is used our liquidity, okay? Now, a lot of my own understanding of the marketplace is before kind of the last 6 to 12 months were that it was supply and demand that moved the market. So I was, drawing on my supply zones like this, okay, and I was then dropping down to lower time frames. You can set the replay tool like this just so we can see it a little bit closer. Dropping down to lower time frames. I was waiting then for like a push down. I'd enter the trade like this. I'd set my stop like that. And then I would wonder why I got stopped out so much. Now, I made profit like this, but I was taking a lot of stops as well, and I struggled a lot of the time to make profit, okay? I want to show you guys something that's really, really important to understand, okay? What moves the market? Can anyone tell me? What's the reason why price typically reverses?
Liquidity.
Liquidity, that's it, okay? So liquidity, spell that right, yeah, okay. Type it like 40 times a day, but I still always misspell it. Okay, liquidity is the #1 reason why price reverses, okay? That's what causes reversals. And what's a really important factor in all of your trading is making sure that there's a manipulation of liquidity before we get into any kinds of trades, okay? Before, I'll hold my hands up, I would often just wait for supply zones to be tagged. I'd wait for setups, and that worked, okay? It had a habit of working. But it's liquidity in the marketplace that fuels the moves, and it's really important to understand that, okay? So this is how I previously would have drawn up my chart, and I would have looked at a short position, okay? I would have been stopped out, and I probably would have got the second one. But I often used to tell myself that if the zone gets swept and we get a bar closed outside of the zone like this, okay, we get a close outside of the zone, that zone, I was taught, was now invalidated, okay? That zone is no longer valid to trade from, okay? I was also taught that you have to wait for a clear reversal, like a Wyckoff pattern, okay? Once you've got that clear 3 pushes, then a push down, you can then get into the trade, okay? And that's not a bad setup, to be fair. You can take some really good trades like that, and you kind of have that here, okay? But ultimately, I was waiting till price maybe came down to something like this, okay? And I was getting to trades later. Sometimes I would miss them, okay? Now, what's really important to understand is that once manipulation has been brought into the marketplace, okay, and a zone has been manipulated like this, then ultimately we can be looking for, as soon as we've got some kind of manipulation pattern, okay, and there's 2 that I'm going to talk you through. One is just a straight push up and push down, okay, so a raid on the previous highs. Really, really simple stuff, okay? But the key is to make sure that there's no more than 3 bars, okay? 3 bars, or 3 wicks, okay, outside of or above, should we say, above or below liquidity, okay? Now, as long as there is no more than 3 bars or 3 wicks above or below liquidity, okay, that now is a valid zone that we can look at for reversals. And this is how I've been catching a lot of my trades lately, okay? Now, you can take a simple entry like this, okay? Stop above the high, okay, and hold to the lows. Asian lows, quite a good one to target. But there's a better setup that I've learnt that is really a really good way to get into these trades without much risk of it failing on you, okay? And it's called the manipulation setup. Has anyone seen an MSU before, manipulation setup? Or is it new? Have you heard of the name?
No, not heard of it. I think you've coined it, Check.
Not me, unfortunately, but it is a good one, okay? So, before, I was looking for a clear slowing of price, a raid, imbalance, push down, and then we get into something like that, okay? Now, there's an easier way to get into these trades. What we want is this. We want to push down from an area of liquidity, okay? We want some structure to be formed, and we want to see a trending marketplace to start make its way down, okay? What we're then looking for is a manipulation of this new trending market, and then we wait for an engulfing pattern, okay, to show us that we have changed direction once again. What this does is it provides us with clear manipulation after a liquidity raid. So what we're looking for is a manipulative move here, okay? Let's just mark this as red, okay? Now this allows us to get into trades a lot earlier, and it allows us to get into entries that are a lot tighter. So whereas we might be getting into entries, you know, like this with big stops above the previous high, it's not necessary if we've got manipulation. I'll show you an example, and this is a good one to look at, okay? This trade here would have taken us maybe something like this, okay? With the stop above the high, okay? We would have then held it. Let's see if we get our target. Come on. Let's jump up a time frame, see if it speeds it up a little bit. Let's take out that Asia low. Come on. Come on. Come on. Jesus. We're going to get there. There we go. Okay, so it's taken us a full day, 24 hours of trading, and how many of us would have held that through swap when it's not, I mean, maybe not many of us, okay, but it's taken out the Asia low, it's done what we expected it to do, okay. Now, the way I would trade these now, so we've got there, I'll just move that to this one side, okay, so we've got there a 2.8R trade, okay, not bad, but it's taken us a full day, it's not as quick as I want. Now, here, you can see, after we've had some further movement down, okay, we have our manipulation setup. So push down, push up, push down, manipulate that move, an engulfing pattern there, okay? Now what I can do with this now is I can take the exact same trade, I can enter here, I can place my stop above that high, okay, because I now know that that's a safe trade, okay, and if you test this you'll see what I mean. And our 2R trade, I'm not going to draw it all the way out, okay, but our 2R trade becomes 5R. And this is part of the reason why recently I've been able to double and sometimes triple my profits. I've been testing this against how I would have entered previously and how I would have entered now, okay? It is in itself a manipulative trade, okay? We have created structure, and then we have manipulated that initial structure, okay? And if you watch this, after major areas of liquidity have been swept, okay? This will get you into some really, really strong trading positions. Does that make sense? Does anyone have any questions on that setup and how it works?
No, actually, but where on which time frame should we consider the liquidity?
So for liquidity, I'm looking at anything above the 15-minute, really, okay? And there's a couple of things that I'm looking for that I want to talk you through as well. Have we got time? Yeah, we've got plenty of time, okay? So there's a couple of things that I'm looking for, okay? For me to validate a zone now, previously, and as I've taught in some of my previous videos, what I'm looking for is I'm looking for a raid of previous highs, an impulsive move down, okay, and then a retest. For me, that was enough for me to validate, okay, so let's say that's our supply zone, okay, and we've taken out liquidity from a previous high over there, okay, for argument's sake. That, for me, would have been enough to validate a supply zone. So for me, I'd be looking at this, okay? That's raided the highs, it's pushed down, it's left us some imbalance. You know, that for me is plenty, okay? But I would see zones like this, okay, like this one here, often created by news events, and I would wonder why they would get swept all the time, okay? Now, these areas here, if in kind of classic SMC smart money trading concepts, if the zone is fully manipulated, okay, or it is fully mitigated, it's often not an area of value. What should happen based on SMC trading is that the zone should hold, okay, and if it has been broken, then it's a trade. We don't look at that zone any longer, okay. There's a couple of things that you want to be including in all of your zones to really validate them, and this is where you're going to get moves like your classic supply and demand zone move. So here's a good example, okay? Perfect. Look at that perfect zone, okay? We've got this here. It clearly rated highs to the left over there. We've then had a push down. We've got imbalance. We've got impulsive moves, but price doesn't even really react to it, okay? And the reason for that is liquidity is what is moving the marketplace ultimately. Now, what I'm looking for below all of my zones now, and how I change my zones now, is firstly, I'm just looking at the top part of the zone. I'm not interested in all of this stuff below, okay? What I really want to be doing is I want to be highlighting imbalances. We've got imbalance, 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 okay? So we can see probably on a higher time frame, all of this area here is an imbalance area, okay? So we're going to mark that off, mark it as imbalance. This is now our supply and demand zone. Okay, this is now, I'll just double check. Yeah, okay, cool. This is now our supply and demand zone, okay, and this is a really good zone to be looking for. The key thing that I need now before I consider any zones, okay, is liquidity resting above highs underneath, and ideally, well, it has to be close to the imbalance and the supply zone. For example, this area here is not an area I'd be looking at buys from. And the reason for that is what I want to see is I want to see price creating liquidity like that. Okay, so I can then draw on a liquidity area here. Liquidity is what's going to move the marketplace. There are orders in these supply and demand zones, but it's liquidity highs that are going to be reversing the marketplace. So if you want to be a reversal trader rather than a breakout trader, what we've got to be looking for is we've got to be looking for liquidity, resting liquidity sat below these zones, okay? Now, what I want you to start doing when you are looking at analyzing your charts and your markets now going forward is making sure that you're looking for these three things, okay? The raid on previous highs to the left is much less important than we thought, okay? And this is how I was trained. But it's much less important, I mean, that's not really a raid, is it? Price is clearly closed and broken out above it, okay? What has probably happened is, as you can see here, as if by magic, and I promise you, I didn't cherry pick this, okay? As if by magic, we have another supply zone here, which we've tagged 50% of, okay? And as you know, we like 50% of the zone to be taken. We have an imbalance sat there, okay? Imbalance. And we have resting liquidity sat above that point there. So these three things are what's caused price to reverse. And that's what we're looking for. And this is why you may be catching or trying to catch so many trades and then not ultimately getting into them as you would want to, okay? So let's see if we've got our MSU set up, okay? So I'm down on the 1 minute chart here. Okay, so we've got push down, push up, push down, push up, push down, push up, push down. Then we have our manipulation, okay? We set our... can everyone see that? I know it might be a little bit blurry because it's on a zoom chart, but can everyone see that red dotted line I've put in? Everyone see it? Move it out of the way so you can see it. Okay, so that is our manipulation. Okay, what we then do is we wait for a golfing, which is there. We can place a nice tight stop there. Okay, and our trade that would have been probably a stop like that, which is previously classed as our safe stop, and you can still use that if you want to, because sometimes that does get manipulated. Okay, but I find now it's better to wait. You've got liquidity points here, here, and here. Okay. And ultimately, we've got into now some really clean trading. And if I jump up, let's see if we get our target. So our first liquidity point we're going to be looking at is going to be there. Let's see if we get it. Yeah, perfect. Okay. So we've taken out that liquidity there. There. Okay. So we've taken out that liquidity low there. And, you know, we've got a lovely 13R trade. So ultimately, these little tweaks, and they are only tweaks, a lot of the concepts are still the same, resting liquidity, orders, and etc, etc. Okay, these little tweaks can get you into much tighter trades, and they save you having to wait for the big, you know, the big moves. We want to be looking at zones that have three things. Okay, what we're looking for is imbalance. Okay, we're looking for resting supply or resting demand if it's the other way around, and we're looking for just below it liquidity. Okay, these are three reasons for price to return and three reasons for price to reverse from. If we're tagging 50% of that zone, clearing out the imbalances, and we're taking out the liquidity, the resting liquidity from the left, the reason for price to come back up here has now been used up. The orders have been filled, so the next move is most likely a reversal. And by using our manipulation setup, we can get ourselves into some really, really tight trades. Okay. So we've probably got about 5-10 minutes left in this video. Any questions or queries for me on any of these concepts we've discussed?
Yeah, I've got a question.
Of course.
Okay. Now, I could see this looks like a 15 minutes time frame, right?
This is the 30-minute now.
Okay. So what I'm trying to see here is we have our point of interest where you drew those supply levels over there, right?
Over here, this one here?
What if, yes. So since we are taking that trade from there, what if we hold it down to the demand level? Is that visible?
Yeah,
in terms of maybe it could be in,
I mean,
or whatsoever?
Yeah, let's have a quick look. Yeah, I mean, you could do. So what I would normally do with my trading, okay, is I would normally take out on either the 15 or the 30 minute, okay, I would take out my first profits here, okay. That's where I'd be taking out 80% of my position, because look, holding down all the way down to here is, you know, that'd be lovely getting a 33R, but you run the risk of it pushing up and taking out, and you're quite right. My analysis would have been we're in bearish market conditions. Okay, we've broken a major level here, so we know that we are overall bearish. We've broken that major level here. We've then retraced into this area that we are expecting a reversal from. We've got our reversal, and this is an area which has no resting liquidity. So because there's no resting liquidity in this move, and by the way, this doesn't count because this is a push down. Okay, this part here, this doesn't count as resting liquidity. Okay, it is a form of liquidity, but what's that move done? It's done nothing really, hasn't it? It hasn't pushed up higher. It's just a bit of noise in the middle of a range. So I don't consider that as resting liquidity. What we want is in this move up, like we had in this move down, we want to see something like this, that resting liquidity like that one there. Okay. Now what's happened in this instance, we've had a straight push up. So based upon our theory, because there's no resting liquidity, what is price most likely to do to this zone? Is this zone more likely to hold, or is this zone more likely to fail?
Probably fail because the market's bearish, but it's just a reaction point, probably.
Yeah. Because there's no resting liquidity, okay, where is the liquidity? In this zone, where is the liquidity?
Below the bottom candle.
Below it,
the
yeah,
large
exactly.
Candle.
That's it, okay. So the likelihood
Which is why
is...
it goes literally just below it.
Exactly. The likelihood is, and what did it do? It took out resting liquidity here that was sat below or above a remaining supply zone, okay? And if we zoom in on this, you'll see probably almost the pip. Let's see if we've got any imbalance. So yeah, okay, so let's have a quick look. Right, let's draw this out. So I'd probably be using something like this, okay? I then mark out my imbalances. You know, the imbalances don't have to be absolutely perfect. They're more of an area that we want to be attracted to effectively. There's also a tiny bit of imbalance in there as well, okay? So that's an imbalance there as well. So sat below there and there, okay? So if we draw these out and drag these out, okay? Prices, you know, it is fueled, okay? It is obviously fueled by the fact that it's taken out liquidity. That's great, okay? But we do have this area that it could push down into. So for me to want to be looking at a buy from here, okay, if I were to consider a buy, and Aman, could I consider a buy from here? Is the trade, is a buy from here high probability?
Yeah, maybe
Yeah.
because we reduce
Yeah.
the liquidity below the
Yeah.
lows.
Okay, yeah, it's high probability. Does it have high potential?
Yeah.
Yeah, it has high potential as well, doesn't it? Okay, so we wouldn't be considering any buys from here, and this is again what sometimes people make the mistake of, is they look at that liquidity being swept and they think, do you know what, I'm going to buy from here, but that's a low probability, low potential trade. From here, it has both high probability and high potential, so that's a really good place to look for buys from. Market structure used to be my number one thing I'd go to, okay, and the new course that I'm writing and recording at the moment, that's almost flipped on its head. I would always be market structure first, supply and demand second, liquidity third. That's now reversed for me, okay? Liquidity is number one, supply and demand is second, and structure is third. Because even in these bearish market conditions, what do we have here? Really good bull move, right? Really good bullish move. Yeah, that's caused by probably news. And the other thing, a few of you have seen in my Discord lately, we've been discussing is traps. So that's a trap. So I'm expecting that to be blown because news traps normally always get blown, okay? But we've now got an area, whilst it might be corrective and counter trend, how well did that trade work out if we'd held it? Yeah, it took a little bit longer to get where we needed to be, but it ultimately reached the highs and got back into the zone. So, you know, structure is less important. Based upon structure theory, okay, we shouldn't be selling there, should we? We shouldn't be selling from there, should we? Based upon basic market structure, right? We've got push down like this. Yeah, okay, push down. We've now broken structure bullish, yeah? So that is technically, based upon standard smart money concepts, that's a break of structure, yeah? So we shouldn't be selling from there because it's now bullish.
I would argue that one break of the high isn't a change in market structure. I think you need two minimum.
Yeah.
One
fair.
is just a liquidity grab, and then you can have a continuation of the structure.
Yeah,
from
it could be.
backtesting anyway.
Yeah, it could be, absolutely, and that's a very valid point, and this is a perfect example here. Basic kind of structural things that you're taught on YouTube and from mentorships that I've been in before is that if we've broken structure like this, we shouldn't be looking for sells anymore because market structure isn't left intact. But how often does market structure stay perfect like this? And would you have missed then out on a 33R trade if you had followed those basic structural principles? I think the market isn't perfect, and we can't set perfect confines around it. And this is the beauty of liquidity trading and what's called algo trading. That if you follow the way that algo works, which is basically it's searching for liquidity areas, then ultimately you can get into much better trades. And I will now buy and sell in all market conditions. I keep an eye on overall market structure. I might be more keen to sell here because of the overall bearishness. I might be more keen to sell here than I would be to buy. And you can see the buy did struggle to get back up there, but it cleared out its liquidity to the sell side and it got up there, didn't it? So it's done its job ultimately. Now what's beautiful about this is this area has clearly had a reaction on price. And if we go down to the lower time frames, okay, we can see that price has, it started to create some bullish structure to the point where you might have even taken a buy here. When's this? This is New York Open as well, okay? You might have even taken a buy here. For those of you who've been following, I know, man, we discussed this the other week, okay? For those who've been following in my Discord lately, okay, I talk about the New York Open trap, okay? This is reason to believe, okay, not only do we think that this is a trap, therefore it's a news trap, therefore it's going to be blown, what have we got below? We have got resting liquidity sat above an imbalance. And what does price do? It blows our New York Open trap, okay? It clears out liquidity, and it almost to the fucking pip. Look at that, beautiful, okay? To the pip reverses from that imbalance. So this is where then we can wait for our MSU setup. So let's try and find one. Okay, so get this out of the way. So we got push up. It's a little bit more difficult to see. Let's just go to. Do we get one there? Yeah. Do we? Let's have a quick look. All right. So we've got quite choppy price action. Okay. Let's just combine some of these. Push up here. Okay. And then yeah, we get our manipulation there. Okay. Engulfing candle like that. So that. Let me just mark that in red. Okay. That's now our manipulation move. Okay, the manipulation is of that there. Okay, and then very simply we place our buy here. Okay, stop below the low. If you've been really tight on that, you might have got stopped out. It's always worth giving your trades a little bit of room, as you all know. Okay, we take this trade and we expect, first liquidity point. If I go up to my 15-minute time frame, first liquidity point has taken us up to here. That's 10R. Second liquidity point, if we waited it to clear that liquidity out there, that resting liquidity would have been 17R. So, over the course of Tuesday the 8th of August and Friday the 4th of August, so over the course of a couple of trading days, we've taken out a solid kind of 50R from the marketplace. Now, trades aren't always perfect, okay? I work full time. I can't always catch trades perfectly like this. But ultimately, even if you catch half of these, you get into them a little bit late, as I sometimes do. Okay, you've still got 13 on that one and 10 on that one. Okay, so these liquidity points are something to place, a lot of focus on, and not just be looking at supply and demand zones with imbalances, because that's not enough. We need the liquidity to fuel the moves, and you'll find if you ever see your zones blow, you'll find that there's normally a liquidity area, often resting liquidity above an imbalance or above a demand zone or supply zone, like we've had here, like we've had here, like we've had here. Okay, there's often those sat below zones which cause them to blow, and then that's why often trades will get swept. You get stopped out, and then the market continues in your direction with you left out of the marketplace without you even realizing. Okay, so hopefully that's been helpful, guys. Any more questions? I think we've gone over 45 minutes, so I think we're okay. We can carry on.
Yeah, I got a question.
Of course.
So, can you quickly show me how can we draw the levels in different time frames and use those levels? Because when I sit and draw the levels on my laptop, and it all mess up, yeah.
So we're talking about the levels that I'd be looking at for potential reversals.
Oh, like New York Open, New York close, Asian or London levels.
Oh, you mean these things like the Asia range?
No, the lines, the lines you put in your
Sections, market sections.
Say again.
For example, how can we get a high probability trades from the levels? The New York lows, the New York highs, the Asian lows highs.
So I don't personally trade. The only time-based ranges that I trade is Asia. Okay, the only one that I'm looking for manipulation on, but that's because normally it doesn't move that much in Asia. It just collects orders. And what you'll find with Asia, which is these orange boxes here, is Asia is normally always manipulated before it moves off. Okay, or it is the price will often come back, manipulate it, go off. Price will often come back or test it, manipulate it, and go off. It's not always perfect, which is why it doesn't form a huge basis. And often what happens is if Asia's in a good area where we're likely to find sells, like we've got a big push down like this, we've started to push up, we'll often find it swept. If it's in the middle of nowhere, okay, price will normally reach for another area of liquidity. So there'll probably be something sat in these candles. So for me, I don't trade New York high, New York low. I don't trade London highs or London lows. What I'm majorly looking for, and I'll hide all this for the time being. 2 seconds. Let's hide all of this. Okay. and I'll show you what I normally do. So if I'm looking at raw chart like that, okay, the first thing that I'm going to be looking at doing is I'm going to be looking at daily levels, okay, that might be suitable for me to trade from. So the previous day's high and low, so this is the daily chart now. The previous day's high and low is really important. So that one there and that one there, okay, those will be going to be ones that I'm going to be paying close attention to, okay. And as we can see, price has clearly manipulated it and then moved away. The other thing that I'm looking at on the daily chart is any major levels as well, so any major swing points. So that is a major swing point. As you can see, price has come up and it's rejected it well, okay. That I would class as a major swing point as well, so we put that one in there, and then we've got that major one there that you can see I've already marked up from previous, okay. So major swing points are important to look for as well. Those are pivot points in the marketplace. That's where a lot of traders will be looking for reversals from. So the first thing I'm looking at is the daily chart. I'm going to be looking at the high and low of the previous day, and then I'm going to be zooming down to the 1 hour. Okay, now the 1 hour is where I'll be looking at areas, swing points for my reversals. Now we've already got this one here. That's a really clear one, as you can see. Okay, that was a previous day's high, and as you can see, price is pushed above and it's rejected it really, really well. So the hourly swing points are good ones to look for manipulations from. Okay, but we've got to make sure it's got all of our elements, of course. We've got to make sure it's got our supply or demand zone, which it would be here to here. Okay, we've got to make sure it's got our resting liquidity, which would be here, and we've got to make sure that it's got our imbalancing as well. Okay, so all three parts are there. Okay, and as long as we've got all three parts like that, then it's in an area that I'd be looking for reversals from. Does that make sense?
Yeah.
Yeah. Okay. Does that answer your question?
Yeah.
Perfect. Okay, cool. Anyone else have any further questions?
So I'd like to know, how do you manage to stay in a trade? Let's say, for instance, if you are swinging a trade, just like the example we saw here right now. Yep. If you are to swing that trade, how do you manage to keep yourself, your emotions in check? Because most times I find that when I'm in profits, I'm eager to take out to close the trade so I don't lose my existing profit. And when I'm in loss, I keep hoping the market will kind of come back to, you know, to give me the profit. So yeah, I don't know. I have.
So I think once you understand that it's the liquidity that the market is chasing, the algorithm of the marketplace that controls the moves is chasing liquidity. I think when you start factoring that into your trading, it will make a big difference to your results, because you're going to be starting to pick trades from high probability areas that have a high potential, like this one here we discussed, okay? You're going to start picking those trades, which means your trades are going to work out more, okay? The next thing to understand is if price does push down, so for example, let's say you'd caught that high there, okay, and price moved like that, and took out that low here. I'll just mark it in purple so you can see it. Can you see the dotted lines, by the way, guys? Are they clear?
Yeah.
Yeah? Okay, cool. So if price then takes out that low, that's where I'd be looking for my first profit. Now, I'm a day trader, which means I don't typically hold trades overnight. Very, very rarely would I hold a trade overnight. I'm normally closing before the day's up. I'm not looking to swing trade. I'm looking to take out profits. So I would say if you're taking out profits, anything above 2R is good, because you only then have to be right 50% of the time. And I think if you're implementing these concepts where we're waiting for resting liquidity, sat below an imbalance with a supply or demand zone, okay, then you're going to be right on the trade 50% of the time or more. So as long as you've got 2R of profit out, then you can take 80% of it and you are probably going to end up in profit overall, okay? The problem comes is when we pick the poor quality trades, when we pick the low probability trades, and we take 2, 3, 4 different losses in a row. I'm sure you've all been there, I know I have. And then the problem with that is that we then take a good trade, but it only maybe goes to say 2R or 3R. We think, do you know what, I need 5R or I need 6R for me to catch back my losses. And actually that can be counterproductive. So it would be good for you to think, do you know what, if I catch a good trade, and let's say you did catch this one right at the top, okay? Let's say you caught it right at the top like that for whatever reason, okay? And you held it down to here. You're thinking, oh, do you know what, I've taken 3 losses today, so 2R isn't enough. That's not enough because I won't have catched back my losses or caught myself back up. That's the wrong mindset to have. The way I think is, if I get 2R today and I get 2R tomorrow, now I'm caught up. But if you hold it, hoping that it is going to push down to some, you know, lows and then get you back in profit for the day, that's where you can end up in some problems. So I would always use the first, I'd go to something like the 5-minute time frame or the 15-minute time frame, okay, and use the first, what I would say is a major liquidity point. So we've got liquidity points on this trade here, we've got liquidity points there, we've got another liquidity point below Frankfurt, and we've got another liquidity point below Asia. So any one of those you could be taking profits off, because that is an area where if price does reject from these highs, that is an area where price is likely to come to. 1, 2, 3, 4. And if we play this forward, we probably see that it rejects to every single one. Okay, so the first one it's rejected clearly, as you can see. Okay, it's messing about up there. Next one, it blows straight through, but the third one, see that? Frankfurt open, so that's Frankfurt open, so that's when Frankfurt opens for the day. See how that perfectly that rejected? Okay, and then Asia, it might blow Asia. Is this the one we looked at earlier that took ages? It is, isn't it? All right, let's get to it. Okay, it's bounced off, and then you can see, although it did blow through it, you can see it has rejected with 15-minute candle off Asia as well. So these are areas where price is likely to reverse from. So I would normally just target the first. I take 80% of my trade off there. I'm out of the market. On a 2.5R trade, I'm now 2R up. If my remaining, what does that mean? My remaining 0.5 runs down to 5R, then I'm going to get another 1R out of the marketplace. And all in all, I've got 3R out of the market, but I've got it out safely. Does that make sense? Hopefully that does, buddy. So I think we're going to wrap it up there for today. Hopefully that's helped. Hopefully it's added some, you know, new things to be testing out. For those of you, I think all of you are in my Discord. I'm going to be trading these concepts on a daily basis. As I said, past 6 to 12 months, I've been learning this stuff, and it's revolutionized my trading. So keep an eye on my trades. Next webinar, we're going to talk about traps. Okay, so the New York Open trap and the news-based traps have meant that I've now more profitable in news events than I've ever been before. I normally, I don't want to jinx myself, but I'm mostly winning news trades now rather than mostly losing news trades now. And there's a simple little hack that I can teach you that I've discussed briefly in the Discord. So hopefully there's been some value in that, guys. Really appreciate you all turning up for it. I'm going to get this recording uploaded to YouTube tonight, so you can watch it back. And if you have any questions, as always, you're welcome to just drop me a message in Discord or put it in the group.
Cheers.
Yeah.
Thanks, Jack.
Hey, no problem at all, guys. Nice to see you all. Cheers. Take it easy.
Yeah.
Bye.
Thank you. Cheers.